Hello, my name is Sally Gimmon, and I'm the owner of the trustisyou.com, and I have a free class on the um, uh, a class that's www.sallygimmon.com. I want to teach as many U.S. investors, also business owners, entrepreneurs, and also franchise owners, and also 1099 income earners to save U.S. taxes legally. So few people have ever heard of the Spendthrift Trust. It's legal. It's in the IRS Tax Code 643B. It's been in front of the United States Supreme Court on two separate occasions. Both times it's been favored. And uh, I work with the Benson Financial Trust. It was written by a Harvard law professor 76 years ago. It's never been audited. The law firm is now run by his grandson and great grandson. And they're so confident if you buy a trust, they will give you a certification saying if you get questioned by the IRS, they'll defend you free of charge. In 76 years, it's happened once. So let's get into this. Today, we're going to talk about business trust. The business trust is for all U.S. business owners, entrepreneurs, franchisee owners, and 1099 income earners. You will save at least 90% on your federal income taxes yearly, and in 43 states, no longer pay state income taxes. Let's share the screen right now. This is a client from Missouri. He's divorced. All the kids are grown. He is a consultant. In 2023, he knew he made about $125,000. He's at 24% tax rate. So we use those numbers. At 90%, he's going to save $20,562 a year. And then also an extra $5,735 in Missouri state taxes. So grand total in 1 year, and this goes from year to year, generation to generation, he'll save $26,297 for the full year, or an extra $2,191 per month, not working harder, not working longer, not working smarter. He can take this money and he can put it back into his business, his consulting business. He could pay off his mortgage. He could buy a new vehicle. He could take his family on vacation. He could give to a charity or save for retirement. It's his money, and he has access to this money because he has the debit card to the bank account. Now, the full title of the trust is Irrevocable, Complex, Discretionary, Non-Grantor, Spendthrift Trust. Let's go over those five elements. Irrevocable goes from generation to generation. The Rockefellers Spendthrift Trust is 7 generations old and has almost 400 people under the same EIN or employee identification number, the tax ID number. Irrevocable, complex. This trust can hold money from day to day, week to week, month to month, year to year, decade to decade, century to century. The law firm I work on behalf of has a trust that's over 350 years old, and because it comes from England, way back when King Henry VIII started the Church of England. So irrevocable, complex, discretionary. Whoever's a trustee or trustees can make the rules for all the beneficiaries. There's no contesting in court. There's no infighting. Even from the grave, they can control what happens with the trust. Irrevocable, complex, discretionary, non-grantor. This makes us very different than what 97% trusts out there are. My mom and dad had the family trust. Susie Orman talks about the family trust on PBS television. The difference between this is my mom and dad were the grantors or the settlers of the trust. They started the trust. When they pass away, the trust dissolves. This trust, when you start it, you will have somebody who is not a grantor, who's not a trustee, or who is not a beneficiary. You will need their social security number. It's not a speed bump. You can use myself or another representative of the law firm free of charge. They will be the grantor or the settler. They'll be the trustee for less than 5 minutes, and then they sign themselves away. This makes the trust completely private. Nobody knows what you own, where you own it, how much you own it, or what you do with it. Irrevocable, complex, discretionary, non-grantor, spendthrift trust. Like I said, it's been in front of the United States Supreme Court on 2 separate occasions. If you Google Tax Code 643B, you will find an opinion letter from the IRS dated September 11, 2028. It's an opinion letter. The IRS cannot change the tax code. Now, I don't care what trust you have. Paul Benson wrote 5 very specific trusts. The business trust we're talking about today, the beneficial trust for investors. So if you're selling your business, you'll pay capital gains or have the beneficial trust. With the beneficial trust, the 5 taxes you save, capital gains on any profits, interest income taxes if you're a passive investor, dividend income taxes if you're in the stock market, rental income taxes if you're a real estate investor, and royalties if you have talents. Then he also wrote the charitable trust if you have a 501c3 company, the senior trust if you're over 65 and making too much money on Medicare, and finally, the mineral rights trust if you have oil rights, coal rights, shale rights. Today, we're just talking about the business trust. Once you pay for it, you will file a 1041 tax return. We introduce you to the CPA who will file it for you. And the first payment of the tax return, we cover that. If you want to continue using that CPA, it's your choice, or go back to your own CPA. I want as many people to know how they can save taxes easily. So again, my free www.thetrustisyou.com, and then I have a free class on the Great Discovery. That is my name, www.sallygimmon.com. Thank you for watching. I hope you have a wonderful day. Take care and start saving money just like the rich do. Bye-bye.